बेच नहीं रहा है उसके लिए बिग इंसेंटिव है क्योंकि जो टैक्स का बर्डन है वो नहीं बढ़ा है तो एक ये फायदा लोकेशन है। इसके अलावा सस्टेनेबल फाइनेंस के लिए ब्लू बॉन्ड्स का कॉन्सेप्ट की बात करें यहाँ पे मिल सकता है यानी जो समुद्र के जरिए बहुत सारे
इसमें थोड़ा कंट्रोल्स कम है।
शैलेंद्र भाई नमस्कार।
नमस्कार बस आवाज आ रही है क्या मेरी?
आ रही है।
चलो ठीक है, बस वही चेक कर रहा था मैं।
क्या सस्टेनेबल फाइनेंस के लिए बॉन्ड्स का कॉन्सेप्ट की बात करें समुद्र के जरिए बहुत सारे
इसमें थोड़ा कंट्रोल्स कम है।
शैलेंद्र भाई नमस्कार।
नमस्कार बस आवाज आ रही है क्या मेरी?
यूट्यूब में
चलो ठीक है, बस वही चेक कर रहा था मैं।
यूट्यूब में थोड़ा डिले से रिले हो रहा है ना।
क्या सस्टेनेबल फाइनेंस के लिए बॉन्ड्स का कॉन्सेप्ट की बात करें समुद्र के जरिए बहुत सारे
विदेश का जो लॉगिन है क्या घड़ी
Jadi lagi nih dong,
विदेश का जो लॉगिन है
recording started already.
Okay. Aभी mute.
Ritesh is host speaking.
नमस्कार।
All are on mute mode.
Okay. अभी
राइट को टॉप पे देखो, नहीं वो नहीं उधर ऊपर ऊपर ही
यूट्यूब लाइव लगाया क्या?
नहीं पीछे देखो सो फाइन होता है जूम
All are on mute mode.
राइट को टॉप पे देखो, नहीं वो नहीं उधर ऊपर ही
यूट्यूब लाइव
सो कितना जी फाइन होता नहीं वो नहीं उधर ऊपर
बोलना चाह रहे हैं? I think waiting list पे है, देखो फॉलो करो।
3 members. सर आ गए ऐसे सेट हमारा
शेख समद A
स्टीम पार्टी के ना
अब 10 मिनट्स है ना
3:5 शुरू करेंगे
मैं क्या पास समझ गए ना हाँ राइट
अभी चेंज करना है क्या?
समाप्त कराने से पहले
एसएस बोल के आया देखो एसएसए 2 बोल के आया देखो नहीं ये
एक और सिस्टम लगेंगे क्या आपका अलग से?
आइए नमस्कार
सर नमस्कार
आगे दुबे भी आगे हिम्मत आ गई
सारा से
हाँ दुबे से आगे तो हो गया हमारे आगे अपना पावर आ गया कनेक्शन हाँ इसमें से टू आ गया नहीं बस सब स्क्रीन पर एक चीज नेक्स्ट टाइम कैसा भी है अभी का भाई ना भाई ने माउस ने नेट का वाला है मेरा डब्ल्यूबी है
नेटवर्क नहीं उसे सिस्टम என்ன மெல்ல மெல்லிகா
इतना रिपीट हो रहा है इतना रिपीट हो रहा है
Good afternoon, everyone.
Good afternoon.
Good afternoon.
Good afternoon, sir. Sir, shall I share my screen, sir?
Good afternoon.
Welcome, Samad sir.
Ritesh,
Thank you, sir. Sir, permit me to share my screen, no, sir.
Yes, yes, yes.
Where is the host co-host? We are given you. Main host.
प्रेसिडेंट का फेस हटाओ भाई, सेक्रेटरी को दिखाओ.
सेक्रेटरी किधर गए? आ रहे सब, आ रहे सेक्रेटरी सब आ रहे आगे.
Roja bhai, good afternoon.
Good afternoon, sir.
Belated happy birthday to.
Thank you, thank you.
We also listen there only. That's why I said. After we complete our this thing, we'll mute this. Then we can see it. Then we'll mute that one. The sound will come again. Double sound.
Very particular. राम जी बुला रहे आपको.
Okay.
Ah.
Hello, friends. Is it audible?
No, you are unmuted.
No, I have unmuted.
No, we pay.
Hello, friends. Shailu bhai, are you able to listen?
Yeah, I can. Are you able to hear me?
Yeah. Very
Okay.
nicely.
Okay. Let us start, Secretary Saab.
I'm waiting for Ramdev ji Putra. Yeah, hello. Ramdev ji, namaskar. Shall we start?
Yes. Already speaker is here, na?
Yeah, speaker is.
Speaker sir has joined. Sheikh sir, yeah.
So what is
Sir,
the
I'm in, sir. I'm in. Sir, I have joined.
Yeah, Sheikh sir. Okay. Be able to listen to you.
Thank you.
Thank you.
मैं करूँ क्या सर?
Admit all.
एडमिट ऑल करते रहना पड़ेगा.
Actually, default में है message है. Donation है कुटे.
Kenya State. Very good afternoon to you all. I welcome you all online. Hello. I welcome you all to the virtual meeting to the on this seminar organized by Telangana EP Tax Bar Association by our eminent speaker today, CA Shaikh Abdul Samad sir, on subject topic annual returns under GST. I now give it to the President for the welcome address. Thank you. President sir.
Yeah, thank you, Secretary Daima sir. And good afternoon, friends. Along with my Secretary, Treasurer, and other Governing Council members, I welcome you all. Speaker of today's afternoon, CA Sheikh Abdul Samad A, my dear fellow Governing Council members, my professional colleagues, good afternoon to you all. I remember the famous quote of Sri Mahatma Gandhi, learning is the process of life. If learning stops, dying starts. The practice always keeps on telling, learn, learn, learn. The moment we stop learning, we are out of the world. That is practice. Our clientele will dictate the laws to us. We should always be ahead of our clients, assistants, and fellow CA article students, so that we feel energetic and satisfaction. Annual returns under GST are always confusion and sometimes unable to explain to our clients and assistants. To avoid such confusion, Tax Bar Association has invited experts from Chennai to understand in detail. With this, I welcome one and all to this seminar on Zoom platform, Long Live Tax Bar. Thank you, friends. Thank you very much. Next point, agenda.
I now give it over to my friend, GC committee member, CA Shailendraji Sharma, to introduce our today's speaker, Sri Shaikh Abdul Samad Ji. Over to Shailendraji Sharma.
Good afternoon, friends. A very warm welcome to all of you. I am privileged today to introduce Sri Shaikh Abdul Samad A sir to you. He was born in a village close to Virudachalam, Tamil Nadu, but brought up in Mumbai. He did his schooling in Mumbai and later came to Tamil Nadu for graduation and professional studies. He did his articles at Sanjeev Shah and Associates, and presently he is partner in charge of the indirect taxes compliance team there itself. He had worked extensively in the areas of service tax, excise, and GST. He based on contribution of wisdom attained in the practice of the said laws. He shared his experience at workshops and training programs concluded for government officials of Government of India, namely Central Excise, Chennai Commissionerate 3, National Academy of Custom, Excise and Narcotics, Chennai, the Commissioner of GST and Excise, Tiruchirappalli, the Commissioner of GST and Excise, Tirunelveli, the Commissioner of GST and Excise, Goa, the Commissioner of GST and Excise, Indore, as well as Office of other states government also, like SGST, Mysore Division, SGST, Tiruchirappalli Division. He has also contributed to the professionals and students at various branches of SIRC. He has contributed to various publications for GST and indirect taxes, committee of ICI on GST matters. Besides this, he is a very good human being also, sir. Recently, Mr. Ritesh Jan has introduced me to Samad sir at our World Conference of Accountants in Mumbai. And he came up very warm, he gave us very warm reception and a welcome. So with these words, I present Shaikh Abdul Samad to you. Thank you.
Thank you all. Shall I come in, sir? Sir,
Yes,
may I-
sir. Yes,
Yeah,
sir. you
now
can
I
come in.
request Sri Shaikh Abdul Samad, today's eminent speaker, to take up the charge and address our gathering. Thank you. Over to Shaikh Abdul Samad ji. Namaskar. Welcome.
Thank you, sir. Thank you very much. Good afternoon, everyone. I'm at the outset, I first thank the Tax Bar Association for giving me this opportunity to talk to the augusted audience. Thank you very much. So first, let us start and understand the annual return. To begin with, we have to first appreciate why annual return is to be filed in GST. What is the purpose of filing annual return? And is there any section or backing in the case in the GST law which permits me to file an annual return? What is the objective of filing annual return? To start with, when I was in the year 2019, when we were filing annual return for the first annual return, when we were filing, my article came to me and asked, sir, what is this annual return? Is it only compiling the data? I have filed my R1, I have filed GSTR 3B. Shall I just compile the data and file annual return? At that time, I told him that no, that is not the intention of the law. I categorically told him that intention of the law is giving an opportunity to a taxpayer to rectify his errors, omissions, and commissioning, which has happened during the process of filing his regular returns. And in the same line, we saw a press release on 3rd of July 2019, where the CBIC has categorically stated that it is the final opportunity to the registered person. If there is a short payment which has happened at the time of regular returns, that short payment can be made good by filing the annual return. Now, the next question which my article came back and asked, sir, they are telling that you can rectify the errors. And the board circular also has come, press release has come, where they said you can rectify everything. Now he came up with the unique issue. Sir, I have missed to take the credit for the making payment, outward liability, RCM liability. I'm going to report, I will make the payment. What about the credit reversal? What about the credit of the missed invoices? Can I take a fresh invoice? Can I report the fresh invoice in my GSTR 9? Then I told him that if I go with the language of the act, my GSTR 9 is nowhere connected to my e-credit ledger. My GSTR 3B is connected to e-credit ledger. So he asked me another question. How are you proving this? Section 16, subsection 2 categorically says that you have to report your ITC in form GSTR 3B, or to be very precise, it says the return which is prescribed under section 39. Okay, section 39 speaks about GSTR 3B. GSTR 9 is prescribed in section 44. So that is one indication that no fresh credit is entertained while filing annual return. However, if you want to reverse ineligible ITC for the non-compliance of Rule 42, Rule 37, then you can use DRC 03 and do the reversal first and then report that in the annual return. So in toto, as per section 73, this is my final opportunity to prove that yes, there was some error or omission in my return, which I have rectified. So once I file my GSTR 9, GSTR 9C, during the GST audit under section 65, I will tell you any audit para which is going to come, people are going to enforce section 74. They just have to tell that there was a press release which told that you can rectify. Opportunity was given to you to rectify under section 73, but you have missed the bus. So I am left with no option than to ask you to pay the taxes along with interest and penalty under section 74. So this return is very prime return in GST era, and we have to file this return looking into taking this opportunity to rectify the errors. And to rectify these errors, we have to visit to our books of accounts. What is books of accounts as per my GSTR? What is books of accounts as per my GST law? Section 35 subsection 1 categorically says that every registered person, the here term every registered person means every GST IN. If Shaikh Abdul Samad A have 4 GST IN in the same state, then it implies here that I have to maintain certain records and returns GSTN wise. If Shaikh Abdul Samad Ahmed has 4 GSTIN in different state, again the same analogy applies here. And where is this records to be maintained? It has to be maintained at the principal place of business or at the additional place of business. And what are these records? These records are production or manufacturing of goods. So it is nothing but a central excise register, which was RG23, RG1. Okay, RG1 was that register where I used to get the production detail. So in excise, every manufacturer was duty bound to maintain this register. So the same thing they have brought out here. Apart from that, outward register, inward register, and stock register. These are the 4 prime register has been prescribed in the law. And now what is this outward register? Outward register is nothing but the register which reports all my outward supplies. When I was giving this lecture, in one of the session, one gentleman came out and asked, "Sir, why are you advocating that I have to maintain outward register? Why I should not file my return based on the profit and loss account credit side? I will file what is accounted in my books of accounts. Why I should maintain the separate document or register for the purpose of filing my returns?" The answer is very simple. What are we into? GST is nothing but a new version of central excise. In central excise, the duty liability was imposed when the goods were manufactured. but the duty was liable. The liability used to arise when the goods was removed from the factory. So when the goods was removed from the factory, the accounting standard used to permit me to recognize the revenue only when the ownership is transferred. But in units, in manufacturing units, the goods are cleared not for the sale. Sometimes it is cleared for warehousing. Sometimes it is cleared for job work purpose, or rarely or majority of time it will be cleared to the depot. So these transactions were not reported in profit and loss account credit side. But those transactions, since they were duty bound to pay excise duty on the happening of removal of the goods from the factory, they were maintaining this register. So when I delivered this, the gentleman agreed, but he told, now we are in GST regime and you are still emphasizing on excise. Still emphasizing on excise. I told him, I convinced him that GST is nothing new. It's a old wine in new bottle. Even in GST, we have transactions where sale does not happen. There is a transfer. What is supply? Supply includes everything. Supply includes sale, transfer, barter, isn't it? Section 7 of CGST Act. Moreover, there is certain transactions which does not have consideration. So when there is no consideration, I will not be reporting in my credit side of a P&L account. Rather, it will be reported as a debit side of my P&L account. Okay. For example, I am the owner of a shop where I trade into mobile phones. I have gifted a mobile phone to my employee. One mobile phone I have gifted to my employee, and this mobile phone is iPhone. Another mobile phone I have gifted to a student who had secured the maximum mark in the school. Now the question is where I'm supposed to report this. Whether I have to report this transaction in my outward supply, or I have to report the transaction in my stock register. It all depends on what document I am issuing. So when the transaction is with my employee is a related person, and this transaction warrants me to issue the tax invoice. And the tax invoice, as soon as I issue tax invoice, that will form part in my outward register. And when I'm giving a gift to a student, which is only a gift, I will report the removal in the delivery challan. And that delivery challan will be reported in the stock register. What is the purpose of reporting that delivery challan in the stock register? The purpose is very simple. The purpose is to mark that there is certain goods which has been given or free of cost, which warrants me to satisfy section 17 subsection 5 gift. When the goods are given on gift, I have to pay tax. I have to reverse ITC on the purchase value of the gift. Okay. So I explained him that the outward register is maintained for that purposes, because in my credit side, this transaction will not be there. It was similar to what was happening in the excise regime. Okay. Now coming to the financial statement. My financial statement, I prepare based on accounting standard. There are certain transactions which have to be reported in my financial statement, but point of supply does not get triggered. So when the point of supply does not get triggered, I am not supposed to issue the tax invoice, but the income will be reported. Let us take one example. I am a corporate body and I have given one of the property on rent to a person, say for 30,000 rupees. And since I am a corporate body, I have to report this. I have to maintain my books of accounts on accrual basis. But my billing cycle is on 10th of next month. So in the month of March, I have raised invoice on 10th of March for the month of Feb. But when it comes on 31st of March, I have to book an accrual entry. I have to book an accrual entry. So for the 20 days, I will book an accrual entry. So 30,000 divided by 20, 30,000 divided by 30 days, multiplied by 20 days, I'm going to get 20,000. So I have reported in my profit and loss account credit side this 20,000. However, in my book, in my GST R1, I have not issued invoice for this 20,000. So there is a probability that the officer can come to me and say that, look, your income in your profit and loss account is more by 20,000 rupees and you have not paid the taxes for it. Please pay it. Okay. But with the help of my outward register, I can demonstrate that my billing cycle is on 10th. And here, since my books I am maintaining on the accrual basis, I'm not supposed to raise any invoice on 31st March. So it's only a journal entry which I have passed, and there is no tax liability. Okay, on the next financial year, what happens? On the 1st of April, I'm going to reverse that journal entry. So that 20,000 will be debited to my income ledger. And on 10th of April, I'm going to raise an invoice, say for 30,000 rupees. So on the month of April, my R1 will show 30,000 rupees invoice, but my books will show income of 10,000 rupees. Can I go for refund of the excess payment? Answer is no. I cannot go for the refund of the excess payment because the liability is on 30,000 rupees, which I have remitted. It is only because of the accounting standards there is a difference in my income. Okay. Likewise, this is with regard to the services. Likewise, in case of supply of goods, when the goods are sold in CIF basis, we have witnessed that for the year end, people report sale in transit. The goods have been sold. The invoice is raised. The invoice is raised, but in books, it is debited to the sales account. It's in transit. So since it is in transit, the ownership has not transferred. Accounting standard does not permit you to create a revenue. So you have not created a revenue, and hence there will be a difference in the GSTR1 turnover and the turnover which you have reported in the books of accounts. So outward register is the one document where you have to maintain the complete outward supply. Inward register is another document where you will report the credit portion of the taxes which you have availed. Now, what are the assertions which we have to satisfy? Assertions which we have to satisfy when we prepare this outward register. The assertions is classification of a transaction. There are transactions which appears to be same. For example, the best example is sale of cold drink. If I go and have cold drink in a restaurant, the restaurant person is going to charge me 5%. The same cold drink, when I go to a supermarket and buy from there, he is going to charge me the higher rate along with the compensation. And this is the implication of classification. So we have to demonstrate what business we are. So the outward register will help me to demonstrate that what business I am carrying out. Moreover, now it has been made mandatory to maintain HSN-wise particulars. The invoices should carry HSN. Previously, at least there was a circular where they said, if your turnover is less than 1.5 crore, there is no need to mention HSN. And if it is between 1.5 crores to 5 crores, you have to give only 2 digit. Above 5 crores, 4 digit. Now that press release has gone. Hereafter, it has been made mandatory that if your turnover is up to 5 crores, you are mandated to give 4-digit HSN. And if it is above 5, then you have to give 6-digit HSN. In GSTR 9, it has been made mandatory. If you are not going to give HSN particulars of outward supply, you cannot file your GSTR 9. So this outward register will help you to do identification and give a proper HSN for the transaction. Okay. In case of developer, we have seen this in case of developer. Developer sends the goods under the cover of a delivery challan. So delivery challan will have HSN codes. That delivery challan is not a document of outward supply. Delivery challan is only a document which are concerned with stock register. It has nothing to do with the outward supply. The outward supply should carry the final invoice. So from one side, when the goods is sent to the another side, it will go with the delivery challan, which will have HSN. However, once that work is completed, after the trigger of a point of supply, when the registered person gives the tax invoice, okay, if it is classified as supply of service because all works contract, as per the is nothing but service. So it is the duty of the registered person to give the SSE code. It's not HSN code. But lately, we have observed that people are giving HSN codes of goods. And when we go and examine the rate of tax for that particular goods, it is 28%. However, he has only collected 18%. Can I justify myself that I have given HSN code, okay, and I have raised an invoice for the works contract? So if you have raised the invoice for works contract, then you should not mention the goods HSN codes. If you're going to report HSN code with the lower rate, I will tell you, you are calling for a trouble during the Section 65 audit. The auditor is going to come, the audit party from department will come and check your HSN code, and he is going to pull the thread saying that, look, this HSN code is subject to 28%. For example, cement. Okay, it's subject to 28%. However, you have reported only 18%. You have paid taxes as 18%. And as I told you, this is a final opportunity. GSTR 9 is the final opportunity where it is all self-assessed. And you are telling that the particulars which is reported here in GSTR 9 is true and correct to your knowledge. It is not true and fair. So it is true and correct. So he will take that undertaking and he will tell like it is you who have filed it. So this HSN is subject to 28, and it is highly possibility that he may issue the show cause notice for the difference. Okay, nature of supply. Today, early morning, this nature of supply was a debatable matter. So in the meeting where I went, we were discussing on this nature of supply. We took an example. Take an example of a jeweler. A jeweler, when I go and buy a jewel, delivers the goods over the counter. So when he delivers the goods over the counter, the recipient, if he is registered in some other state, gives GSTIN of that state. The question here was, can a jeweler, the supplier, give IGST invoice? So in debate, we were discussing this matter and we came to a conclusion that it can never be IGST. It has to be CGST, SGST. So the conclusion was drawn based on two aspects. First aspect, we went to the VAT regime and we were deliberating on it. During VAT regime, the similar transactions were subject to VAT. It was not subject to CST. And if the people were charging CST, then they were collaborating the documentary proof that the goods have left the state. Only when the goods leave the state, it was subject to CST. So even in GST, if the supplier wants to charge IGST, then he has to categorically satisfy himself the goods is not consumed in his state. The goods has been taken outside, okay, probably to the state which he is mentioning in the place of supply. So there was one gentleman who read section 10 and he told, sir, delivery can be by a supplier, it can be even by the recipient or his agent. So we vouched, we told, yes, it is true. But for that, that is an indication which is drawn in the law, where they say that it can be delivered by the recipient, but the recipient has to give to the supplier a person who is preparing the tax invoice, a person who is paying the GST. He has to satisfy himself that the goods is indeed going outside. So he has to collect the courier receipts. He has to collect the courier receipts to satisfy that the goods have left his state and it is going to the state which he has mentioned in the tax invoice as a place of supply. Okay, so nature of supply is very critical. We have to examine, and if there is the question that the final question was, assume I have paid wrong tax. Okay, instead of paying Tamil Nadu's tax, I have paid Maharashtra's tax. I paid IGST. Can I apply for the refund under section 77? Okay, under section 19. Okay, rather, can I apply for the refund? Because the sections 77 and section 19 says that if you have paid a wrong tax because of the place of supply, then you are eligible to rectify that mistake, pay the correct tax, and take the refund of the wrong tax paid. Now the here question is, when it was subject to Tamil Nadu's SGST, I have wrongly paid IGST, and the gentleman, my recipient, has taken ITC, whether state of Tamil Nadu will compensate his share. Okay, the IGST portion the IGST portion which has wrongly gone to the state of Maharashtra, whether the state of Maharashtra will agree to forgive his share. And the gentleman who has taken the inward, he is going to take the credit. Okay, in my view, this is a debatable matter. Okay, if in my view, the officer may not permit refund under section 77 because someone else has taken the credit, and refund section 54, rule number 89, categorically state that you have to demonstrate that there is no unjust enrichment. Okay, so the refund under section 77 and section 19 will be subject to unjust enrichment, and I don't think the refund will be given. Point of supply, we all know what is a point of supply. If the goods are cleared, the tax invoice should be prepared at least before or at the time of delivery. It can never be like after the goods have gone, I'm preparing the tax invoice. Okay, so that is with regard to the times of point of supply. For services, they have given 30 days time. But the question is, what is the point of completion? In construction industry, we have observed this. When the rate got changed from 1/4/2019, it was 5%. We observed the industry went and collected completion certificate, whether the unit was complete, not complete, somehow they got the completion certificate. So as per the law, once you have got the completion certificate, which is a service, you have completed, you have proclaimed yourself that you have completed the service. So the act says, section 12 says, since you have completed the service, you are duty bound to issue tax invoice. Even if you have not received the money, you have to pay tax portion. You have to pay the tax, the outward liability. Okay, so many people who got this, when we told this matter, that you are liable to pay tax now, they were bemused. They told, look, I have not received the money. but I got this completion certificate. So from that date, 30 days, you have to pay. If not, then the officer has the right to levy interest for the delay. People are paying tax. Even today, people are paying taxes for the completed project based on the advances which they are receiving now. So in my view, if you're receiving advance, the point of tax supply is already completed, 30 days time is already lapsed. So the officer has right to claim interest. And moreover, he can also put penalty. Okay. Inward supply, inward register. First thing is classification. Table number 6. I am duty bound to classify the transactions as input service, and capital goods. For the financial year 21-22, I am supposed to make a bifurcation of input and input service as one cluster. Capital goods, I am duty bound to report separately. So input and input service can go as one cluster in table number 6, but capital goods has to be reported separately. So this register will help me to do that classification. Documentary evidence, the entire table 6 is designed in such a way that they can pull one entry in the table and say that I want a document only for this entry. Okay. So what are these documents based on which you can take credit? Rule 36 says that there are only 4 documents against which you can take credit. Document number 1, tax invoice of the supplier or a duty or a debit note of the supplier. Document number 2, self invoice. And this is only for unregistered person. You can prepare self invoice only when there is a unregistered person. You cannot have for registered person, you cannot make self invoice, or you are not supposed to make self invoice. Document number 3, bill of entry. Document number 3, bill of entry. Document number 4, ISD invoice. So these are the 4 documents against which you can take ITC. And these 4 documents you are going to report knowingly or unknowingly in particular systematic way, where the officer can pull one cluster and say, I want only these invoices. Okay, we will see that. We'll see that when we are going to discuss table number 6. Inward register is yet important because of the classification which is required for the reversal under Rule 42 and 43. Rule 42, common ITC subject to both taxable and exempted supply has to be reversed proportionately, and Rule 43 is connected to capital goods, which is used for providing both exempted as well as taxable supply. Abiding with section 16 subsection 4. We don't have the concept of GSTR 1, 2, and 3. The ecosystem which was prescribed at the earliest period of GST era is not there. The ecosystem is not there. If the ecosystem was there, then this issue could not have been cropped out. Okay, where a person now, since he is going to give the consolidated value in GSTR 3B, he has to categorically ensure himself that he is not taking credit of the tax invoice, which is pertaining to the previous financial year, and the time is barred. So if he takes the credit, and if he has taken the credit, then he has an opportunity to rectify that in GSTR 9. But if he does not reverse in GSTR 9, then let me tell you this, it's the same language. Section 65 audit, interest, ITC reversal, interest and penalty will go hand in hand. Okay. Rule 37, 180 days. Now in Tamil Nadu, the investigations have started. The first part of investigation is stock audit, which is very common and across the state-wise officer. Okay, the state officer, as soon as they enter the premises, they will ask, okay, please give me the stock register. I want to ensure that the stock count and the stock register closing balance is in tandem. However, However, they go to even to the service provider and ask for the same stock register, which is not possible. Okay. Rule 37 is the second most item where they know that people have not paid to the supplier within 180 days. And no one had done the reversal under Rule 37. So it is very important. It is very important at this stage to examine and pay at least interest for those transactions where Rule 37 is not complied with. Stock register will help me to satisfy the inward and outward supply. Section 16 subsection 2 categorically states that you are eligible to take the credit only when it is received by you. Okay, so this register will help me to satisfy that. Document reference for payout. In case of gift, as we discussed, when there is a gift, I will go to my stock register and I will check when the stock was purchased and what was the ITC portion, based on which it is the cost, the ITC on the cost to be reversed under section 17 subsection 5. It is not on the valuation. Okay, so the stock register will help me to satisfy that. The secondary register which is expected from every registered person to maintain is import register and RCM register. Import register is important with one point of view. Import register, you have to look. Any foreign payment is not subject to GST under RCM. Okay, just because I have incurred certain expenditure in foreign convertible currency, that will not make me liable under RCM. The definition is very clear. The definition in IGST law is very clear, where they say that the place of supply should be taxable territory. Take an example. I have taken $10,000 from or $1,000 from my banker, and I have gone to United States of America to attend a conference. So when I went there, I have used this dollar for my stay, for my travel, for my food. Now, in this case, what is the place of supply? It goes without say. It is the United States of America, non-taxable territory. The place of supply is not India. So when the place of supply is not India, but I have spent in foreign convertible currency. Okay, just because I have spent in foreign convertible currency, I am not liable to pay a RCM. If you have this register, at least you have the documentary proof, or you will know that you have spent for this purpose. But if you don't have this register, the officer under 65, he is going to come and ask you that, look, you have spent in foreign convertible currency. So you have imported certain transaction. Please play under RCM. Okay. But you have to demonstrate to him with the help of the register that the place of supply is not taxable territory and I'm not liable. RCM transaction, there are various notifications where you have to pay the taxes under RCM. Now, there was one big issue which was there in GTA. Issue was less than 750, more than 750. Thank God, hereafter that issue is not there. But the amendment has created another big issue. Now, the GTA can pay 12% under forward charge, 5% under forward charge. The problem with our clients are they don't employ a knowledgeable accountants who can create a two different ledger and say that this GTA is under forward charge and these ITCs are appearing in my 2A or 2B. Other GTAs are not under forward charge. They are under RCM and I am liable to pay tax under RCM. Everything will be reported only in one ledger, which will be carriage inward, carriage outward, freight inward, freight outward. And we are, as a chartered accountant, we will be doing lot of paperwork. We will be doing lot of calculations to identify what has to be ignored, what has to be considered for the purpose of RCM. Now there are two rates, 12% under forward charge, 5% under forward charge. Previously, at least it was very clear that 12% is always under forward charge, 5%, as soon as I see 5% or I don't see anything, I was asking my client to pay 5% under RCM. Now I have to prepare the checklist in such a way that I have to categorically check if 5% under forward charge, if somebody is putting 5% under forward charge, then there should be a declaration in the invoice that should appear under forward charge in my GSTR 2B. And if it is there, I will not ask my client to pay under RCM. If not, then I'm going to say that please pay under reverse charge. You are not going to lose anything. You pay on one hand and utilize on the other hand. Export register. Export register is very important and it has to be prepared, examined before you prepare your GSTR 9 because of the rule number 96A and 96B. Rule number 96A categorically states that in case of goods, the goods should be exported from the date of invoice within 3 months. In case of services, you should receive the foreign convertible currency within the period of 1 year from the date of invoice. Now here, the non-compliance will cost the clients huge. If the person have not exported the goods within the prescribed time, then all his subsequent consignment should be with GST, with the IGST. Okay. Now the thing is, if he has opted for deemed export, he have advanced licensing, he have EPCG license, then even if he's going for with payment, let me tell you, rule number 9610 is going to come as a hindrance. People have taken advanced licensing, people have done exports with payment, they got the refund. Rule number 9610 has become a hindrance for them. Now department is issuing notices to them categorically saying that, look, you have not complied with rule number 9610, so you are not eligible for the with payment IGST. However, you have taken it, please repay that money along with interest and penalty. Okay, so that is the damage which the person is going to cause to himself if he is not going to follow rule 96A. Okay, 96B on the other hand categorically says that you should receive the foreign convertible currency for the supply of goods within the period of 9 months, which is prescribed in FEMA. The extended period of 3 months, if you have made an application to the RBI. Okay, so in toto, it is 1 year. You have to receive the money within 1 year. If not, then you have to repay the refund. You have to repay the refund which you have got, and can I get back the refund once I receive the money back? The answer is yes, but again, it involves a lot of paperwork. Advances, we will see advances, the implication of advances when we are discussing table number 4. Now coming to the form, the entire form is divided into 6 categories: category 1, category 2, 3, 4, 5. And we will discuss these categories in detail. Now coming to category 1, financial year, for the current work which we are doing, it is 21-22. GSTIN, no problem at all. Legal name, no problem at all. Trade name, no problem. What if the person have multiple trade name? What if a person have a multiple trade name? What if the sole proprietor, apart from his business income, he also has commercial income. commercial, the property given on commercial. Okay, what if that income is there? What if he have any other like teaching profession? He goes and teach in the institution, which is not his business, What if that income is there? Okay, and he has taken registration for the legal name. Okay, say Lakshmi Enterprises, where he is supplying paints or hardware items. So when he is supplying paints and hardware items, as far as his profit and loss account is concerned, it will have sale of supply of paints, supply of hardware items. Okay, excuse me. And the GST will be paid only on this item. What about the income from the commercial property, which is given on rent? What about the teaching income, which he has got from the coaching class? Whether that income is subject to GST or not? In my view, the answer is yes, it is subject to GST. And if he has to take registration for that, then I will suggest him not to take registration under his trade name. It has to take the registration in his own name, so that this issue does not crop out. Okay, now GSTIN has brought a facility. When this matter was brought to their notice, GSTIN has agreed to bring a facility to add the multiple trade name in GST network. Okay, whereby a proper proprietor can also can take his name, can take registration under his name as a trade name, and as well as a proprietor of a Lakshmi Enterprises, which is there in our example. So coming to table number 4, to prepare this table, I will be requiring the help of, I will use my outward register to fill these transactions. As I had already done the classification of B2B supply, B2C supply, zero dated supply of export, and zero dated supply of SEZ transactions, deemed exports, I will, for these 5 line items, I will use my outward register. Now coming to zero dated supply, exports, except supply to SEZ, if I'm going to fill this entry, I have to satisfy myself that the export registers are in place. The rule number 96, okay, export register is placed and rule number 96 has been followed. Rule number 96 plays a vital role with the condition which is prescribed under sub rule 10. So I will be very cautioned to prepare this entry. If there is a person who has availed with payment and he has not qualified and he has not satisfied sub rule 10, then I will give him a warning signal saying that, look, sir, you have done an export with payment, but there is a condition in rule number 9610 which says that if you have availed the benefit of deemed export, then you cannot go with payment. So the sad part is, when we were preparing GSTR 9C, this was not highlighted to the business. When Chartered Accountant was preparing GSTR 9C, we have made an observation. Okay, in my view, yes, many people have made this observation that the gentlemen, the business have filed their GSTR 1, GSTR 3B, they have filed GSTR 9, but there are certain transactions with payment and they are not satisfying rule number 9610, which is a matter of concern. Okay, so I will sincerely suggest that if you are preparing this invoice, you have to visit rule number 96 and see the compliance of rule number 96 in full. Clause number D, supply to SEZ on payment of taxes. In the year 1718 and 1819, when I prepared this form GSTR 9 and 9C to one of my clients who was doing transaction with SEZ, I told them that please get the endorsement copy on your tax invoice. Please get the endorsement on your tax invoice, because in future, since you are exhausting your ITC, so you don't have the opportunity to file a refund application. But the officer is not aware that you have carried out certain transaction which is zero rated supply. So he may send you a notice, ASMT 10 assessment notice, to demonstrate that the transaction which you have reported as zero rated supply in clause number D is indeed a zero rated supply. And he will demand from you the endorsement copy. But the gentleman to whom I was talking, he was taking it very lightly. He told, look, that is my botheration. Okay, that is my botheration. I have supplied to SEZ unit. I have put the delivery address, which is SEZ unit. Okay, and it is SEZ supply. Nobody can ask any question to me. But only when the assessment notice came, which we already foreseen, he came running to me and he asked, sir, can I get the endorsement copy now for the year 17, 18, 18, 19? The answer is big no. You cannot get the endorsement copy for those transactions because, and moreover, rule number 9610, rule number 96 capital A, which is equally applicable to SEZ transactions. Rule number 96 capital A says that when the goods is removed from your premises, it should reach the destination, or it should be exported within the period of 3 months, isn't it? We just discussed. But when it comes to SEZ transactions, the endorsement is the proof that the goods have been entertained in the SEZ unit. And today, if you want to satisfy, with whom you will go and get the endorsement? Because the officer who was posted at that point of time has gone. The officer who was posted, who was subjected to give the endorsement, has left. He is transferred. Now, if you are going to go for endorsement, he is going to say, no, I don't have. The assessment notice will get converted into DRC 01A, and then DRC 01, and then DRC 07, and then you have to go and make an application of appeal. So this is the stage. This is the right time. Any reporting which we are doing in these tables, we have to call for the proper document. If it is not there, let us highlight this matter to the client so that he can arrange those documents. The intention behind having annual return and annual reconciliation statement is that once you file this, government is thinking that yes, all documents which is required for doing rule section 65 audit is available with you, and they will visit your premises. Okay. So deemed export, what is deemed export? People normally gets confused. They don't appreciate the difference between deemed export and merchant export. Merchant export is exempted transaction, exempted by a notification 40/2017 CT, 41/2017 IT rate notification. It's an exemption notification where the supplier, after satisfying conditions which is there in the notification, can charge 0.1%. If this condition prescribed in the notifications are not complied with, then he is subject to issue debit note to the recipient and collect the entire money paid to the government. Okay, so 0.01%. If we come across this transaction, then we have to ask for the compliance of the notification 41/2017 and 40/2017. So when I asked one of my clients who has done this, I asked him, sir, what is the compliance? Please give me the compliance thing. Look, in Central Excise, there was a form called ARE1 and ARE3. Okay, this is nothing but the compliance of ARE1 and ARE3 in Central Excise. We used to collect the purchase order from the supplier. Okay, purchase order from the recipient. That purchase order will be submitted to the jurisdictional officer of the supplier. Supply will be made after getting the approval from the jurisdictional officer. The supply has to go directly to the port. It cannot go outside. And if it is going to the other place other than the port, then the recipient has to give the acknowledgement that yes, he has received the consignment in his place. He will consolidate the consignment and then he will take it to the port. So after the goods is taken to the port, at the time of filing the shipping bill, the exporter has to give the invoice particulars, the HSN particulars, the value, the entire invoice particulars in the shipping bill. And this shipping bill will be communicated to the supplier, and the supplier has to file this shipping bill to his jurisdictional officer saying that the entire process is complete. This is ARE1 and ARE3 procedure, which has come in the new form. Okay, the forms have been removed. The formal forms have been removed, but informally you have to comply with this. So when we were preparing this, we came to know that the exporter have taken the advantage of 0.1%, 0.01%. But when we call for the shipping bill, he was denying the shipping bill. He was not ready to share the shipping bill. Somehow we got the shipping bill, and when we examined, we came to know that the invoice particulars which was required to be reported in the shipping bill was not there. So we told the client, informed the client that please send him the debit note, ask him to pay the taxes, the differentials. And when that differentials is to be paid, but by my client, I told him to pay with interest. By interest, we'll see in the next slide. What is deemed export? That is with regard to the merchant export. What is deemed export? Deemed export are of four-legged. One is transaction, which is bided by advanced licensing, transaction of purchase of capital goods under the license, EPCG license, transactions, bank which gives gold under under AA advanced licensing, and EOU transactions. Okay, supply made to an EOU is deemed export. Okay, so these are the deemed export. You have to report it separately only if the deemed export conditions are satisfied. Just because a person has taken AA and he has not taken any advantage of that AA, there is no need to report that transaction under the category of deemed export. There are many EOUs. Who procure goods with the GST payment. Okay, with GST payments. And if you are going to collect the GST from the supplier, from the EOU, then it is your duty to report it as a deemed export, provided Form A2 is filed with the department. So if there is no procurement certificate from an EOU, it is normal, it's a regular supply. It will not be treated as a deemed export. Okay. Clause number F, advances on which tax has been paid, but invoices has not been issued. This we have to check with an example. Let us take this example. In my books of accounts, I have opening balance of 45,000, which is subject to 9% tax, which is 4,050. During the year, I have received advances of 50,000. So again, 4,500 taxes is liabilities on me. I have remitted it. I have done the adjustment of these tax because I have raised an invoice. I have raised the refund voucher. So in total, I have done the adjustment of 67,000. Okay. And the tax portion is 6,030. My closing balance of as on 31st March is 28,000. That is the value of the advance which I have received. It's there in my credit side of my balance sheet. The tax portion is 2,520 SGST, which is there in my debit side because I have paid the taxes. Okay. Now the challenge here is what I'm supposed to report in entry number 4. What I'm supposed to report. Presently, if I go and see this transaction, okay, this let us take the same example. I have received 4,500 is my tax liability under the head CGST. I have done the adjustment of 6,030. Presently, what is happening? Okay, in my R1, I have paid 4,500, but I have done an adjustment of 6,030. So currently, in table number 4, in clause F, I am getting negative value, the net of these two values, which is 6,030 minus 4,500. Okay, it is a negative value. My answer, my question is, can my advance run into negative? The answer is big no. It cannot run in negative. So what I'm supposed to report in table number 4? In table number 4, I'm supposed to report 4,500 is the advance which I have paid, and 50,000 is the advance which I have received. From this 50,000 rupees, how much adjustment I have done? So the adjustment breakup in my books of accounts is 35,000. So in total, it is 67,000, which is 32,000 adjustment is from opening balance, 35,000 is from the current balance. So in total, it is 50,000 minus 35. So the advance which is against which I have not raised invoice, it's not 50 minus 67, but it is 50 minus 35. So my advance will be 15,000. So what I am supposed to report in table number 4 is 15,000 and the tax for that 15,000. Now the next question will be, in that scenario, I will be liable for extra liability because I have done the adjustment of 6,030, correct? But here I'm going to report the lesser value. So this will result into an extra payout, isn't it? Now that extra payout, this is the table which explains what you are supposed to report in table number 9. In table number 9, in the payable column, you are supposed to report this because this adjustment is prescribed in my GSTR 3B. In GSTR 3B, what I'm supposed to report? I'm supposed to report tax invoices and debit notes minus credit note and refund voucher plus advance voucher for which invoice has not been issued. This is there in entry number 4. So this will come from entry number 4. The advances, the opening advances against which I have done the adjustment. In our example, it is 32,000. That 32,000 will be reduced in entry number 9. Reporting negative value in clause F of table number 4 is completely wrong. Your advance can never run into negative. Okay, so when I told this to the entire audience, wherever I have taken this class, everybody agreed this, that yes, advances can never run into negative. So this is how it has to be reported. So coming to the credit note, coming to the reverse charge, clause number G, what has to be reported here? What is supposed to be reported here? Let us take an example of my books of accounts. There is a freight of 1 lakh rupees. There is a liability of 1 lakh rupees for the year 21-22. As a chartered accountant, a person who is preparing this GSTR 9, he has to check when this liability of 1 lakh has been paid, whether it is paid in the year 21-22 or it is paid in the year 22-23. So this 1 lakh, if it is paid in the year 21-22, no doubt you have to report this 1 lakh as a liability in clause number G, in 9 as well as 9C. But if you have paid only 40,000 rupees, 60,000 you have paid in the next financial year through GSTR 3B, then 40,000 you will show in 21-22 in both the GSTR 9, but in GSTR 9C, you will report 1 lakh because your books of accounts is demonstrating the liability of 1 lakh. So when we do tax audit, when you do tax audit, we also look into the RCM transaction. So when we have come across any transaction which is subject to tax, but the tax is not paid, we always recommend, as a chartered accountant, we always recommend our client that please create provision for this, because this is the liability for the current year, which you will remit in future. But for the to have the balance sheet, which is the statement of a fact, as on 31st March, we will recommend to have a provision. So that provision is created, that 60,000 provision is created. If we remit through DRC 03, if he has remitted to DRC 03, then that 1 lakh rupees will be paid, will be reported in GSTR 9 as well as GSTR 9C. But if it is paid through GSTR 3B of the next financial year 22-23, then reporting in for the year 21 and 22 for that 60,000 is not required. You will report payout of 40,000 alone. 60,000 you will not report in 9, but in 9C you will report 1 lakh. 40 plus 60 you have to report, and in the comment you will say that there is a difference of 60,000 rupees which has been paid in the next financial year through GSTR 3B. Next GSTR next financial year for say FY 2022-23 GSTR 9, you will report that year's RCM liability as well as 60,000 rupees. And in GSTR 9C, the answer is no, it cannot be yes. The 60,000 rupees will not be reported. You are supposed to report only the liability of that particular year. Okay, of liability of 22-23. It is not yes, it is no. For 9C, it is no. Okay, you are not supposed to report. Again, there will be a difference here. This difference, you will say that it is the payment of RCM for the previous financial year, which has been reported in GSTR 3B for the financial year 22-23. Okay, and the taxes have been paid in the said year. Okay, so when the officer visits for the audit under section 65, you can demonstrate through GSTR 9C that in first year there was a comment that there is a liability which is to be due in the next year, and in the next year there will be a comment where you will contra that the liability which was reported in the previous year has been paid. Okay, so this is the functionality of GSTR 9C. Coming to table number 4, IJKL, it is optional. It is optional for the current year, provided the upper value, the value from B to E is shown in net. Okay, but I still suggest don't do it. Report the gross value up and report the credit note, debit note, and amendment in the respective column. The reason is very clear, because if you're going to show net value, you are indirectly giving an indication to the officer that you don't have registers. Okay, so please maintain registers, and these registers, let me tell you this very clearly, these registers will help you to satisfy section 65 audit. Okay, if you have registers, your audit will be smoother and it will be completed faster. Okay, credit note, debit note, and amendments. In table number 4, this language is there, and in table number 10, table number 11, the same language is also available. And the question is, when I'm supposed to issue credit note, and what is this amendment? Okay, when to issue debit note, credit note, and what is this amendment? Amendment will come when you have issued the document which is correct. I have issued a tax invoice which have a value of 1 lakh. It is a correct document. But at the time of feeding the data in my GSTR1, I have wrongly typed, wrongly hard punched as 10,000 rupees. Isn't my document is for 1 lakh, but hard punch it made 10,000. In such scenarios, to correct that entry, you will pull the invoice and you will do the amendment. But when to issue debit note and credit note? Debit note and credit note will come only when the document which you issued initially is wrong. Instead of 1 lakh, you have issued a document for 10,000. Later on, you have rectified, you have identified that that activity was for 1 lakh, but you had issued only 10,000. Now, for the difference of 90,000, you will issue the debit note. It is vice versa in the case of credit note. Okay, but in real world, people don't appreciate this. In real term, I have observed that the document is issued correctly, but they will go and enter a fictitious credit note or fictitious debit note. Instead of doing amendment, instead of doing the amendment, they will not pull the invoice and do the amendment, but they will issue the credit note and debit note. And this debit note and credit note, they don't understand this. If there is a supply of goods, and if you are going to issue the credit note, then you are subject to section 34. Okay, the officer is going to come and check the compliance of section 34. And section 34 says that there are only 4 scenarios for which you can issue credit note. Okay, so now if you are not going to satisfy that, then the entire credit note will not be considered. And moreover, this credit note is not there in your invoice, in your books of accounts. Okay, it's not there in your books of accounts. So as a chartered accountant, if I am a proper officer, if I don't find that credit note in your books of accounts, then I will tell that this credit note which you have taken is not eligible. Okay, so it is not eligible as per section 34, and there will be an extra liability on you. Okay, so please ensure that it is there. Now coming to the upward amendment and downward amendment. I am liable for, say, 1 lakh rupees. I am liable for 1 lakh rupees. I have 10 invoices which I have reported in my GSTR1, or in my outward register, I have 10 invoices reported in GSTR1, all 10 invoices in the current financial year, which means I have paid the taxes, isn't it? I have paid the taxes in the same financial year for all those 10 invoices. In such scenario, if I have done everything properly, then the entire transactions or entire transaction of 10 invoices will be reported in table number 4. Out of 10 invoices, I have reported only 5 in my GSTR1. During tax audit, my chartered accountant has come to me and he has told, Samad, the 5 invoices which is there in your books of accounts, you have reported as exempted. But it is not exempted, it is subject to tax, isn't it? And he has recommended to create a provision for that balance 5 invoices. I have created the provision for that. If I have created the provision, I'm left with 2 options, either to pay the taxes through DRC 03 or to pay the taxes through GSTR 3B. Okay, if it is DRC 03 for the year 21-22, okay, I will open the DRC 03 and I'm going to put 21-22, which means I can report this transaction in table number 4. But if I have paid the transaction, if I have paid the taxes through GSTR 3B of the next financial year, then I cannot report the transaction in table number 4. I have to report the transaction in table number 10, because this tax is been paid in the next financial year through GSTR 3B. So this is the difference between reporting the transaction in table number 4 and table number 10. Now this is upward amendment. Coming to downward amendment. For downward amendment, the first care which you have to take is whether the downward amendment is reported in GSTR1. Okay. You have to categorically check that the downward amendment is always reported in GSTR1. The reason is very simple. You have issued tax invoice where the other person is eligible to take the credit. So he has taken the credit of the invoice which you have issued. Now, for downward amendment, you have to do the amendment or you have to issue the credit note. So the credit note or the downward amendment should be reported in GSTR1 so that the range officer, the jurisdictional officer of the recipient will demand him to reverse the ITC once it is reported in GSTR1. So if it is reported, then I have to, next care which I have to take is whether it is adjusted in GSTR3B or it is not adjusted. Okay, again, there are two scenarios. If it is adjusted in the current financial year, the downward amendment will be reported in table number 4. If it is not adjusted and it is adjusted in the next financial year, up to 30th of November is the time limit, then it will be reported in entry number 11. Once it is reported in GSTR1 and I was not having enough turnover to do the adjustment or enough payout to do the adjustment, then I'm eligible to apply for refund after filing my GSTR9. After filing my GSTR9, there is a circular which categorically says that if you are left with no option then to do the adjustment, okay, then you can apply for the refund. Credit note, the circular number is 137 for the applying refund. Now coming to the credit note, the analogy which we adopted for the downward amendments also carries out or also follows in the credit note. If the credit note, the first thing is you have to ensure that the credit note is reported. Second, you have to ensure when was the adjustment done. And if it is done in the financial year 21-22 GSTR1, then in GSTR3B, then it will be reported in entry number 4. If it is done within the November of the next financial year, then it will be reported in 11. If it is not done, again, you have opportunity to apply for the refund. Okay, refund, and the circular is 137/07 2020. So coming to table number 5, this table is very important because here you don't pay any taxes. So if you are not going to pay any taxes, you have to be very cautious. You have to be extra caution that there is no further liability in future. Table number 5A, zero rated supply without payment of taxes. Okay. B, supply to SEZ without payment of taxes. So here the first condition is you should have a proper LUT with you. The date of LUT should be prior to the date of tax invoice which you have issued. Compliance of rule number 96A is mandatory here. Okay, it is very much mandatory here. And if the LUT has been taken after the date of tax invoice, then kindly ask for the condonation letter which he has filed with his commissioner. Okay, a commissioner in certain cases can condone the delay of filing LUT. Okay. And in case of SEZ unit, please get the endorsement copy. If you are not getting endorsement copy, presently many SEZ units are filing a report and they are sharing DTA-SEZ procurement certificate. So it is your duty as a supplier to collect the endorsement copy or DTA-SEZ procurement certificate. Clause number C, supply on which tax is to be paid by the recipient on reverse charge basis. Here you have to check the condition, reverse charge notification. When we were preparing this table, we observed one important aspect. There was a condition for the sponsorship. So I was preparing this table for one of the club. And when I saw this, the condition was the recipient of the service should be either a corporate body or a partnership firm. And this club has taken a sponsorship where they have received the tax invoice, marking the transaction to be paid under RCM because the recipient was a registered person. I asked the club how it is under RCM. Because the condition which is there in the RCM notification is that the recipient should be either a registered person or the recipient should be either the supplier, either the corporate entity, or he should be a firm, partnership firm. But in this case, the entire invoice was given to sole proprietors. The sponsorship was done by the sole proprietors. So in that case, I told that I cannot prepare this entry, but I have to create a liability which will be B2C transaction because reporting B2B in GSTR 9 have no use. I cannot apportion the credit. I cannot apportion the credit to the recipient. Okay, so here you have to take care of rule number of the notification 13/2017, 3/2017, the RCM notifications. Okay. Exemption, nil rated and non-GST. What is difference between exempted and nil rated? Okay. We were of the view that exemption and nil rated is one and the same. Both are brothers of the same family. My understanding was proven wrong when I saw 3-line item in the notification 11/2017. 11/2017, in the month of Feb 2019, introduced 3-line item in the notification having nil rated, which means it was only in the Feb 2019 nil rated was first time introduced. And the interpretation which we had that anything which comes into 2/2017, 12/2017 is nil rated was proven to be false. The notification is an exemption notification issued under the section 10, which talks only about power given to the government to issue notification for exempting the transaction. So the notification 12 and 2 is nothing but exemption. Nil rated, in my view, will never come because the 3-line item which I saw in the notification 11/2017 was connected to government transaction. Only when it is done by the government, it will come. Otherwise, it is not required. Non-GST supply, which also include no supply. Now let us understand what is difference between non-GST supply and no supply. Non-GST supply means two health drink, transaction of two health drink, one for the human being, other for the vehicles. That is non-GST supply. What is no supply? No supply are those transactions which are prescribed under Schedule 3 and those transactions which does not satisfy the definition of goods, definition of service. So those are called no supply. Now the question here is whether I am supposed to report the no supply in my GSTR1. Answer is no. It is only in GSTR 9 where you will report the no supply transaction. But when it comes to GSTR 1, you are not supposed to report no supply. Okay, there is no need to report no supply. Entry number 5, HIJK. The explanation which I gave for the 4 HIJK and same. Coming to another important table number 6. Table number 6A is auto-populated. We all know whatever IT I have claimed will be auto-populated in table number 6A. Table number 6B, as I told you previously, that it is based on the document which you have based on which you have claimed the ITC. We discussed that there were 4 documents against which you have taken ITC: tax invoice, self-invoice, tax debit note, bill of entry, and ISD invoice. So the table is designed in that way. Table number 6B talks about tax invoice by the supplier, debit note by the supplier. Table number 6C, self-invoice, which you have prepared for the transaction where you have paid the the liability under RCM, and you have prepared the tax invoice. Clause number D, tax invoice by the supplier, where the supplier has reported in the 2B of the recipient as to be paid under RCM. Clause number E, bill of entry. Clause number F, self-invoice. Clause number G, the last document, tax invoice by the input service distributor. Look, the entire table is designed in such a way. For the year 21-22, as we have discussed earlier, for input and input service, you can make one cluster, but for the capital goods, you have to report it separately. For the year 21-22, previously, if you don't have the breakup of registered and unregistered supplier where you have paid under RCM, you can report in clause D, but now it is made mandatory that you have to give this breakup. How much is the self-invoice? How much credit you have taken based on the self-invoice? How much credit you have taken based in the invoice supplied by the supplier? Okay, given by the supplier, marked as RCM. Here the officer is going to come and examine what liability, how much credit you have taken based on the tax invoice supplied by the supplier, marked as RCM from your GSTR 3B. Okay, from your GSTR 3B, and he will compare with your 2B. Okay, there are situations where the transactions are getting reported in GSTR 2B, but people are not paying that tax. Okay, so since it is consolidated for last 4 years, we have reported only the consolidated value. So the officers were not able to appreciate whether the registered liability, the registered supplier's RCM liability was discharged or not. Now, by bringing this differences, let me tell you that officer is going to pull those transactions where you have not paid the taxes or the liability which has been shared by the registered supplier. Okay, clause number E and F. You see the difference in this clause. Import of goods, excluding the supply from SEZ, import of service, okay, including the supply of SEZ in goods and excluding the supply of SEZ in case of service. Why it's so? Why there is a difference here? Okay, the reason is SEZ Act. In SEZ Act,
చెప్పమంటే ఉన్న టేబుల్స్ అదే చెప్తున్నాడు కదా ఏమన్నా ఒక పాయింట్ అన్న కొత్తగా తెలుస్తుందేమో అని.
In SEZ Act, there is a concept of importation. Importation means when the goods is imported from an SEZ to DTA, it is treated as importation. The transaction is subject to customs duty. So the recipient is subjected to file bill of entry. So when he files bill of entry, the duty payment is done by the recipient under import, and he is eligible to take the credit based on the bill of entry. However, when it comes to supply of service, it is not SEZ invoice. It is not SEZ it is not the bill of entry. It is the SEZ who is duty bound to issue the invoice. It is the SEZ which will collect the taxes from the recipient, and he will pay to the GST. He will pay to the department. Okay, so hence here it is based on the supplier's invoice, which will be shown in clause number B. It will not be shown in clause number F. Okay, it is not based on self-invoice. The SEZ will give you the supplier invoice, okay, for the supply of service, which will be reported in clause number B. And the SEZ files GSTR1 only for supply of service. They are not bound, they are not duty bound to file the supply of goods, because their supply is subject to custom duty. Okay. Input service distributor, the credit received from ISD here it is very important to classify this as ISD transaction. In my GSTR 3B, whatever is reported in GSTR 3B will be brought as ISD transactions. Look, there are many people who are making mistakes in this, under this clause. Whatever is apportioned to you by an ISD is not a eligible credit. You have to examine the entire transaction. You have to differentiate what is eligible and what is ineligible. And then you have to take the credit of only eligible credit. For example, there is a head office in Hyderabad. There is a head office in Hyderabad. That head office is registered as ISD. An auditor, a chartered accountant, say from Chennai, has come to Hyderabad to carry out the audit. He has stayed in the hotel. The company has paid the hotel bill. The hotel has charged CGST, SGST. Okay. Since it is addressed to ISD, ISD will take the credit and apportion this ITC to the, in form of IGST, to the entire unit. There is another unit in Chennai. There is a unit in Chennai which has received this credit also based on the turnover. Now, can this credit, which is otherwise ineligible, can this recipient claim the ISD credit of that hotel invoice? Answer is no. Just because ISD has given IGST invoice, I am not eligible to that credit. I have to identify, the ISD will give me the list of invoices marking this place of supply, which is marked to him. Okay, he will give me the list of invoices, that there are 10 invoices, place of supply. If it is IGST charge and IGST is apportioned to me, I am eligible. If it is CGST as GST, which is otherwise not eligible to me, I have to reverse under rule number 39. Okay, that is the implication of rule number 39. Okay, but what inevitably what we have observed is people are claiming the ISD credit, which is coming as IGST, and they are not doing any reversal. Okay, leaving ISD, now there is another concept called cross charge. Okay, now there are two schools of thoughts. One is cross charge ISD registration is temporary. It is not mandatory, and cross charge you can do for each and everything. In my view, cross charge is possible only when there is a proper agreement. Cross charge is possible only for those transactions where you are into that business. If there is a company which is into software, and there is an idle man-hour in some other branch, and there is a requirement in this company, for example, in Hyderabad, there is a branch, and in Bombay, there is another branch. Hyderabad has received a contract from a foreign company for 100 man-hours, but Hyderabad have only 40 man-hours. 60 man-hours they can take from Bombay. Okay, for which Bombay will raise invoice to Hyderabad. They cannot raise invoice to the person who is there in the non-taxable territory, because the contract is between the Hyderabad and the person in the non-taxable territory. So this is called cross charge. But can a head office apportion credit in form of cross charge? In my view, answer is big no. We can't. Because a chartered accountant's invoice, can a company call themselves that they are into the business of chartered accountant? Okay, what is supply? The section 7 categorically says that supply, which is in your business, okay, in the course of the business. Okay, so you are not into the business of chartered accountants or auditing, so you cannot apportion or issue invoice for cross charge of chartered accountants fees. It has to be done through ISD invoice, and ISD is section 24 transaction. okay, which says mandatory registration. So in my view, if there is multiple GSTIN, if Shaikh Abdul Samad Ahmad have 4 GSTIN, then Shaikh Abdul Samad Ahmad should also take ISD registration. Okay, or otherwise he should forego the common credits. Okay, he should forego the common credits, then it's done. Otherwise, it is the must. Amount of ITC reclaimed. Now in GST, there is only 2 sections which talks about reclaim. One is Rule 37, another one is Rule 42. So if you are done the reversal under these 2 rules, then you are eligible to reclaim the credit. For the year 21-22, Tran 1, Tran 2 credit is not there, but for the year 22-23, yes, there is a possibility there will be a Tran 1, Tran 2 transactions. Okay, now in clause M, there is something called any other ITC availed but not specified above. So we have discussed that in rule number 36, there are only 4 documents which is prescribed for claiming credit, and that entire table 6 is prepared in such a way that they can pull the transactions that what is for against what invoice or what document. Now, what is this clause M? Any other ITC availed but not specified. Is there any transactions where I have left out? The answer is no. I have reported everything. Now, what is this? This is connected to transaction which is prescribed under section 18, where there is an amalgamation, where there is a demerger, where there is a transfer of business, where there is a change in constitution, where there is a death of a proprietor. These transactions are subject to ITC 02. So when the ITC is transferred with the help of ITC 02, that needs to be reported in clause 6M. Table number 7, the reversal will be reported here. As I told you, anything which is reported in GST R3B has to be reported in the said form. Okay. Otherwise, if you are missed to report, pay through DRC 03 and then report. Okay. First pay through DRC 03 for the said financial year and then report. It is advisable to report in the respective rules. Rule number 36, if you are not paid to the supplier, in my view, if you ask me, look, every business pays to the supplier, but they pay later. Okay, they don't pay within 180 days, but they invariably they pay. Okay, they pay later. In such case, for the non-compliance, you need not reverse the ITC. Rather, you can pay the interest. Okay, so what is there is no revenue leakage here, because once you reverse, you are eligible to take the credit. Okay, so in such case, what revenue is interested? Revenue is interested only on interest. So I can pay the interest for the lapses, rather reversing now and then reclaiming it again. Rule number 39, as I discussed, ISD will give you IS. If you are in some other state, you will get ISD invoice with IGST levy. So that does not mean that entire IGST is eligible IGST. You have to do your homework. You have to identify what are the credit otherwise not eligible to you. Okay. And then reverse those ineligible ITC under rule number 39. Rule number 42, we had already discussed the common credit has to be apportioned as ineligible credit. Rule number 43, common capital goods used for taxable as well as exempted supply to be reversed. Section 17, subsection 5, block credit to be reversed. ITC Tran 1 and Tran 2 reversal. Now, when there is no Tran 1, Tran 2 credit, the Tran 1 and Tran 2 reversal is not there. If you are not able to distinguish or understand the importance of 37, 39, 42, 43, 17, 5, okay, because something has been reversed in GST R3B, but I'm not able to appreciate. My client is not giving me the data, what reversal he has done. I have done my entire study, and in my entire study, I has come to know that there is no section or no provision in the law which mandates me to reverse the ITC. But there is a reversal in GST R3B. Where I will report? I will report in clause number H. Okay. So clause number H is for that. Clause table number 8. Table number 8 for the current year 21-22 after rule number 37 after rule 36.4 after rule 36.4 after the section, a dedicated section in section 16 subsection 2 clause AA. In my view, you should not get any difference in this table. If you are getting difference, then that difference should be for the invoices appearing in the 2A of the previous financial year. So if it is appearing in 2A of previous financial year, that difference can come here. Otherwise, there should not be a difference. Okay, there should not be a negative difference. Okay, positive difference, yes, it can be positive difference. And that positive difference, you have to analyze why there is a positive difference. Is it because it is getting lapsed? Is it because you have not taken credit of ineligible ITC? Is it because there is a credit which is not pertaining to you? Okay, so that you have to report in the respective columns. And if you are taking the credit in the next financial year, then you have to report in clause number 8C. Otherwise, everything will get lapsed. Clause number 9, here you are supposed to report payable. Paid transaction are auto-populated. Payable, as we discussed, you have to stick to the matrix which has been prescribed in GSTR 3B, which is reporting tax invoice, debit notes, plus advances, minus credit note, minus refund voucher. Okay, so that matrix, that calculation, you have to keep in mind and report only those transactions. So which means in total, you will report 4N and minus advances of the opening adjustments. Okay, adjustments pertaining to the opening advances. Okay, 4N minus advances of opening adjustments. That alone will be reported in tax payable and tax paid. So if you compare tax payable with tax paid, if you get a difference, if you get a positive difference, that means there is a liability on you and you can pay through DRC 03. If you get a negative difference, which means you have paid more, if you have paid more, you are eligible for the refund. But please examine that what is the reason for the excess payment. And if you get one, please file the refund application. Entry number 10 and entry number 11, we had already discussed. Entry number 12, 13 is optional even for the current year. X number 14 is linked to 10 and 11. Entry number 12 and 13, let us discuss this. Entry number 12, it is connected to reversal. When the transaction will be reported here, for this, you have to check your e-credit ledger, okay, ECL, closing balance after filing March month return and your closing balance of the books. Excuse me. Okay, closing balance of your book and the ECL. If it is same, no problem. No need to report in anything in 12 and 13. If my ECL is more, if my ECL is more and my closing balance of ITC, CGST, SGST, IGST is less, then there is something suspicious. There is a matter of concern. There is a probability that the registered person have taken duplicate ITC, which has resulted into excess credit in the e-credit ledger, which is not there in the books. There can be a provision which has resulted into the reduction in the credit ledger. Okay, in my books of accounts, the statutory auditor at the time of tax audit or Companies Act audit, he has identified that there are the company have taken credit of which are blocked in GST. And this credit has been taken, returns have been filed. So he is recommending for the provision, and that provision has reduced the ledger value. So if there is such cases, okay, since the provision is created, that provision has to be made good. Now, there are two circumstances: paid through DRC 03 or through GSTR 3B. If it is paid through DRC 03, that value will be reported in table number 7. If it is paid through GSTR 3B, that will be reported in entry number 12. Entry number 13, there is a closing balance in my books. More when compared to ECL. So my ECL is less, my closing balance of my books is more. Here, the difference ITC, the credit which I have not taken, I have to examine till 30th November, return filed up to 30th November, whether I have taken credit of those invoices which are in excess in the books of accounts. If the answer is yes, that value will be reported here. Otherwise, those credit, as a chartered accountant, I will tell it is lapse. I will create in my audit working paper, I will write that this credit has not been taken in the subsequent period up to the time permitted in the law. It is lapse, and during the audit, during my Companies Act audit, during my income tax audit, I will suggest the person to create prior period item. Okay, it is there in the books, which should not be there. Okay, so I will suggest for charging it as a prior period expenditure. Hereafter, everything is optional. Table number 15, where I'm supposed to report the refund status, how much I have applied during the current year, how much I have received, how much is rejected, and how much is still pending. Okay, but this is optional. There is no need to report these transactions. Beside refund, they are also interested in to know what is the demand status, how much demand of taxes have been made by the officer, how much you have accepted and paid, and how much you are contesting. 16, again, it is optional. Supplier received from the composite supplier, composite tax payer. This is fun. Now, in a similar ground, here they have given me option. Okay, I need not report it here. But what is there? What is there in clause 44 of 3CD? What is there in clause 3CD? Clause 3CD or 3CB, yeah, 3CB. Okay, 3CB, clause number 44, wants you to report these transactions. And invariably, it has been seen that people have told in their report that particulars are not available to report this. Okay, but when GST was introduced, Tally came up with the solution. They told that all transactions which are connected to inward supplies to be punched in the software through purchase voucher. Be it a direct expenditure, be indirect expenditure, it has to be punched through excuse me, it has to be punched through purchase voucher. Only when you use purchase voucher, you will get the entire detail. How much is a transaction from the registered person? How much is a transaction from an unregistered person subject to RCM? How much is a transaction of an unregistered person not subject to RCM? What is the amount of a transaction with a composite dealer? Okay. In my view, in the entire country, no one has this particular. No one has followed Tally. The suggestion which was given by the Tally, no one has done it. Okay, so thank God in GSTR 9 there is no requirement, but they can make it mandatory next year. Okay, there is no requirement here, but there is a requirement in clause 3CD to report in clause 44. Deemed supply under section 143. What is this? Deemed supply under section 143 is connected to supply of goods under the delivery challan for job work. So if you have supplied the goods for the job work, you should bring back the goods to your premises, or you have to make the supply from the premises of the registered job worker within the prescribed time limit, which is 1 year for the inputs and 2 years for the capital goods. If you have done it, no issue. If you are not done, from the date of invoice, from the date of delivery challan, okay, then that delivery challan will be considered as tax invoice, and the tax portion which you have prescribed and that in that delivery challan is supposed to be paid in clause supposed to be paid through DRC 03 and to be reported in clause 16B. Okay, in my view, no one has done it. Okay, people have hardly filed ITC 04. Only when people file ITC 04, this particulars will be surfaced. Okay, since people are not filing it, these particulars are not getting surfaced. But thinking logically, ITC 04, all jewelers who send the gold, who send the old jewelry for making it, converting into ingot, and from ingot to a new jewel, they are supposed to file ITC 04. But when we go and tell in the jewelry association, they don't take it seriously. But they will listen only when the right person blow the trumpet. Goods sent on approval basis but not returned. So approval basis, we all know that previously it was there. Even current year it is permitted. You can send the goods under the approval, under the cover of a delivery challan. But from the date of a delivery challan, within 6 months, you have to get back the goods if it is not approved. If approved, then on the same day you have to raise a tax invoice. Okay. Otherwise, if you are not raised tax invoice, 6 months is over, then the delivery challan will become the tax invoice, and the value which is reported that there will be subject to the tax liability. Clause number 17 is mandatory for current year, and we have observed that if you don't report the transaction, you cannot file your GSTR 9. And for this, again, I am telling you, outward register is very important. You will pull the transactions only with the help of outward register. Inward supply, it is optional. There is no need to give HSN particulars in the inward. Late fee paid or payable for the last year, and this will come only when I don't file my return within the due date, which is 31st December 2023. For the last year also it is not coming, but it should be auto-populated. After filling all particulars, the registered person will give the confirmation, the affirmation that he have filled the information which are true and correct. The language which they have used here is true and correct, because they expect you to pull the transactions from the register which they have told you to maintain under section 35 subsection 1, which has to be preserved as true and correct. So section 35 subsection 1 have the term true and correct. Hence, GSTR 9 also have the same language, which is true and correct. And any reduction in the outward tax liability, due to many cases, it will be considered that the liability has been passed on to the recipient. Why is this so? Because if there is a case and the liability is paid by you, GST liability is paid by you, and that has resulted into reduction, then the recipient, the supplier cannot file the refund application. It is the recipient who have the right to file a refund application. Finally, these are the entries which are optional. Okay, we had already discussed this in the tables. These are the entries which are optional for the current year. You need not report these transactions if you don't have the particular. Thank you very much. Thank you for your patient hearing. Appreciate the hearing. So I have to answer. There are few questions in the chat box, which I will answer it. Okay. There is a question from Namita Madam, which says that in case of a registered recipient we can't take CGST, SGST if tin belongs to a different state. Madam, it's a complex question, but the answer is yes. If the POS, place of supply, which is coming in your GSTR 2B, if it is different, then you are not eligible to take the credit. Okay. The conclusion is you have to read the section 16, subsection 2, where they say that no credit is permitted to the registered person. So if the indication is you are registered in particular state. So you have to read section 16, subsection 2 in tandem with section 20, section 14. Okay. So when you read section 14 and section 16 in tandem, you will come to a conclusion that that credit is not eligible to you. Sorry, but the voice is breaking.
Any other questions, my dear friends, professionals, you can either put it in a chat box or unmute one by one, and please go ahead with your query or solutions.
Sir, there is one question in the chat box, which is like, could you please repeat the entry 12 and 13? So entry 12 and 13, to prepare entry number 12, which talks about reversal, you have to check your ECL and the balance in the ECL after filing March month return and the balance of your ledger, okay, ITC ledger. And if the balance of ECL is more, then you have to examine the reason for that. Okay, the reason can be your chartered accountant might have created a provision which has resulted in the reduction in the credit. So that provision, whether it is made good in the subsequent financial year, even if it is not made good, you have to tell him that look, ECL is more. Okay. But your books, there are certain ITC which is not there in the books itself. That can be various reasons, because you have taken duplicate ITC. There can be like reversal under Rule 42. There can be reversal of ineligible ITC, or there can be a credit which is not eligible at all, or you have capitalized the credit. You have taken the asset. You have taken the credit of a capital asset. However, you have capitalized the ITC value and claimed depreciation in income tax. Okay, so that can be one reason why your ledger balance is showing lesser value than your ECL. If that is the case, you have to report in entry number 13, in entry number 12. Entry number 13 is otherwise. If you have excess balance in your books, then you have to check what is this excess balance, what is the invoices, what are these invoices which is resulting into the excess balance. Those invoices, whether the credit for those invoices have been taken in the next financial year. If it is taken in the next financial year, then you have to ask them, then only you will report those transaction entry number 13. If they have not claimed the credit of this excess balance, then you have to ask him to create a provision currently, or during the audit, you can ask him to charge it to P&L account, treating the transaction as prior period expenditure.
Mr. Samad, there is one more query I think in the chat box. Can you please take it?
Yes, sir. Yes, sir. What we should suggest our client if POS is different of state by registered person belonging to the same POS is out of state, but registered person belongs to the same state. I will require a further explanation on this. Today, as I told you that morning, I was with a couple of department officers. So this was another topic where the department officers was pondering that the GST network does not restrict this type of transaction. Even if POS is different, GST network permit the registered person to claim the credit. Okay, so they were suggesting the network that like similar transactions, like once section 16.4 has been implemented. So after 30th November, any invoices is filed by the supplier, in my GSTR, in his GSTR1, which will come to my GSTR2B, but it will be marked as ineligible, and it will be routed to in table number 4, clause number D, point number 2, okay, which will not come to table number 4A itself, all other ITC. So they were suggesting that wherever there is a place of business, or sorry, POS, place of supply, which is other than the registered person's place, then similar treatment should be done. It should go to table number 4D. Okay. Now, in current scenario, it is going and sitting in table number 4A, which is not correct. So they were suggesting this. Okay. So we have to be very careful hereafter. The other question is, what is the impact of export is done without LUT and all the condition of export sale is satisfied? As there is a circular 125/44/2019, where the circular suggests that if you are satisfying the export transaction, then you have to file the condonation with the officer, the customs. You have to file the condonation, and this condonation on the case-to-case basis will be accepted. So the word which they have used, this case-to-case basis, that is the matter of concern. Case-to-case is a matter of concern. But we have taken in the year 2019, 17, 18, 18, 19, and 19, 20 for our clients who did not have the LUT at that point of time. But we demonstrated that there is a need. There was a need for issuing the consignment, and that has resulted into not availing LUT in time. So please condone the delay. The commissioner has given the condonation. So the other question is, place of supply is Maharashtra, but the recipient belongs to TS, and the supplier is also from TS. Place of supply is Maharashtra. Madam, in this case, I don't think the credit should be given. Okay, so if place of supply is Maharashtra, and the person, the supplier is in TS, I doubt that the supplier is not following the, like if he's a works contractor, then the place of business will be the place where he's providing the service. So in that case, he should have taken registration there. So thank you very much.
Any other doubts, my dear friends? We have got an expert of GST who is, I have no words to express, in fact, one of the fantabulous speakers. Any other queries? We have got another few minutes. Okay, thank you all. Now I hand over to our GC member, Vemula Chandrasekhar Garu, to give vote of thanks. Mr. Vemula.
Thank you, Daima sir, for the opportunity. Sir, Samad sir, it was a fantastic session, and we all GC members are sitting here and hearing your lecture. I'm sure we have again relearned, sir, everything about GSTR 9. The way you covered the class by class, each section of GSTR 9. I'm sure everybody of this Zoom session would have benefited, and they're enlightened, sir. Thank you so much for your time. Though it is very busy time being in December, you have given your time and enlightened us. On behalf of AP, Telangana and AP Tax Bar Association, we extend our thanks to you, sir. And I'm extending my thanks to Mr. Hitesh Jain, in fact, who proposed your name, sir, in our GC meeting discussion. And thank you, Hitesh. It was a fantastic session. Thank you, President, for the opportunity. And we should keep on going this type of sessions regularly. Thank you, participants. Without your participation, this program wouldn't have been successful. Keep attending, and we will be doing this type of programs regular, and keep learning. And wish you all the best. Happy filing of GSTR 9 before 31st December. Thank you very much.
Thank you, everyone. Thank you very much.
My special thanks to Hitesh G. Mehta, Joint Secretary, Hitesh G. Jain, Joint Secretary of Tax Bar, and all my dear GC members for extending their cooperation. I request one and all, we, Telangana and AP Tax Bar Association, are always conducting electing one-to-one best speakers for deliberation of these seminars. I request all of you to take up the issue, join our WhatsApp group, and attend regularly. Thank you very much. Thank you once again. Jai Hind.